good news for the banks because they've agreed that rate. So the biggest hedging is usually done on the downside. So that huge candle there tells me that there was a SOFR hedge coming in at that stage there. Now, if there's a huge candle to the downside, if that reverses, there's going to be a huge candle to the upside at 1 o'clock here. There's going to be a huge candle there. So that's why when the price comes up into this area, of course, take some profits. But you're probably more likely to take very small profits on the basic understanding that we should see a very sizable break north because of the SOFR hedge. Perfect, 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 bloody perfect. How did our pound do after we hit our target price? How many times do you have to see structure coming out like this, guys? How many times do I have to draw structure before it becomes an everyday part of your jigsaw puzzle? Look at what happens when we go from a low to a high, from a high back to the low. We went from a low to a high here and back to low, but that's an inside swing, of course. That's a little inside swing. There's a big swing. Low to a high, high to a low, measured move, and it gave us a buy trade in these two locations here, which were accurate literally to the tick. Literally to the tick. And then we went from a balance area here. We capped off this price area here several times, and I looked at that and says, okay, so that looks like the capper price. So I quite like the structure from the low to the high and the high to the low from these areas here. I quite like the structure there now. That makes a lot of sense, right? And when we do that little structure there, we say to ourselves, right, well, where's the target price for all these buyers, which we are? The target price for all those buyers is right there. And guess what happened at that price? The price peaked out the top edge and sold straight back off again. We all pretty much bottom ticked the market on cable, and we've pretty much top ticked the market on cable from the London session by using simple structures. Remind me again who this Fibonacci guy is. He obviously hasn't got anything on the structure that you guys know. He's not got anything. And there's hundreds of thousands of Fibonacci disciples trading markets on Forex Factory and talking about it in terms of, you know, wave 1s and 3s from Elliott Fibonacci as if they were related in some way, shape or form. And yet all you've got to do is work out these little boxes. Work out these little boxes and simple things happen with simple ideas. You can see that these ideas, if you can put it this way, if you can bottom tick cable and you can top tick cable since the London Open, why would anybody think Fibonacci is of any use whatsoever? Instead, why wouldn't people start understanding that this normal, simple, binary arithmetic is the way the markets actually work from structural points to structural points? So when we look at these ideas, we start thinking about these processes. Simple things make simple sense. And when we start thinking about those simple things, everything we draw is a structure. Look, see the structure again here? Look, there's a structural high. It comes down to a structural low. And you say, why do you use that structural high? Because it's a bloody high. How do you use that structural low? Because it's the lowest point since the high was put in. And when it crosses back above here, that's the structure, right? That becomes the structure there. That's the lowest point. There isn't any other structure. That's it. So where's the target price? Is it 1.6 bloody 1? Or is it 2.0? So bloody stupid. It's 2.0, isn't it? Right there. That's the target price. What happens? The price comes right off that 2.0. Where does it go back to? The change of behavior halfback, which is now a halfback trade. As soon as you hit 2.0, you've got a halfback. It's got nothing to do with Fibonacci. You can see how amazing that process turns out. This little process that simply repeats itself over and over and over again. And you can see how the whole thing evolves. And then you get that new structure, remember, there, and you say, damn it, Nikki, I can see exactly what this deal is. I can start looking at that and saying, there's the structure. I can start looking at the possibility that that structure is going to take me into a sell trade up here. That's where the sell trade was located. It's perfect, isn't it? So anybody that trades Fibonacci is going to get squished by everybody that doesn't trade Fibonacci, that trades this process. Because where was the Fibonacci seller coming in? Well, the Fibonacci seller probably came in at 38 point something percent for some peculiar reason, and then again at 61%, and then again at 75%, and then again at 86%, and then again, and then again, and then again, and then again. You've got so many Fibonacci numbers, they're going to get right at some stage. Because there's so many Fibonacci numbers, isn't there? Yeah, it's going to hit off one of them, Ray, though. It's going to hit off one of them. I've heard that mentioned before. And I say to the guy that says that, I say, which one? Which one is it going to come off? Is it the 38? Or is it the 61s? Is it the 75s? Is it the 82s? Is it the, you know what I'm saying? Which one's it going to come off? They don't know. They simply don't know. They haven't got a clue. Because it doesn't make any sense, of course, because it's not based on anything. It's not based on anything. It is. It's based on the spiral of a snail. So let me get this right. You're going to base your trading off the spiral activity of a snail. What the hell is wrong with you? You're going to base your trading activity off of the breeding habits of rabbits. Think about it. You're going to base your trading activity off the breeding habits of rabbits. It's almost like somebody saying that they base their trading activity off of the alignment of the stars. You know what I mean? Yeah, but that alignment of the stars, when you find a Mars bar getting put into Uranus, and you start looking at that alignment and you say, wait a second, but that's going to have a gravitational pull on the S&P at 1.38%, 1.38 rotation on a Fibonacci. So long as, of course, it's wave 5 of an ABC correction inside of a Gann cycle. And so long as the moon's obviously not a full moon at that stage, we've got a great chance of making some monies. We've got a great chance of making some monies. The funniest thing is, these guys, the funniest thing is, these guys sell hundreds of thousands of classes. And we've got 87 people learning about binary arithmetic. If Kim went out to the world and says that she was going to do a Fibonacci class, she'd probably get 1,000 sign-ups. If she went out to the retail public and says, we're going to do a class on how to use Fibonacci, Elliott wave, Gann cycles, and lunar cycles, there's probably 1,000 people will sign up for the classroom. And that's the honest truth. That's the honest truth, because they're all idiots. They're literally all numpties. We could probably put together some real crappy classroom and everybody typing in the box. So this is amazing stuff, right? This is amazing. Look at that confluence between the Gann cycles and the moon cycles and the lunar cycles and you know, rabbits breeding habits cycles. And yeah, okay. Why don't we just get down to business? Why don't we just get down to business and start figuring out where the trades are going to be located? How about that maybe for a difference of opinion? So you might be saying, well, how do you find something like this drawing down here? How do you find that inside of a normal stat cycle? Well, there's a lot of N shapes forming, isn't there? You've got to try and find a reasonable level, but it always starts from any level. Every single one of these little rejections here is a level, isn't it? The whole point about this, you might say, but you've got as many as Fibonacci. Yeah, but these are all based on reality, not because of Fibonacci number that comes out from somewhere. These are all based on actual areas, levels, reality of liquidity, stops. They've got nothing to do with Fibonacci. So when we start drawing these levels on the screens, we start looking in the background and we say, well, where was the buyer? Not where was Fibonacci. We say, where was the buyer? And we go into the idea of where the buyer was in this little area here, and we can do a profile. And we can say, well, where was the buyer? And you start drawing out a buyer area. You say, well, there was the big volume there. So that's obviously got to have some sort of confluence from that little balance area, right? It's got to have some sort of confluence. You can start looking at that shape there and say, well, it's between that buyer there and this area here. So we can start marking off those areas. So now we've got something to work with. We've now got a possible confluence area. So how do we use that confluence area? Because we can see that the first sell-off here came into this price here, and we start drawing that from the high price. And we can start seeing some of these areas where these projections start taking place here. And we say, well, that's not quite into that same area just yet. And we go down into the next one and we say, well, these guys that sold this whole bracket here, they're going to be targeting this area here. Well, that's now confluence. There's now an overlap, and we say, right, that makes a bit more sense. We've got overlap. We've got an idea. We've got a thought process now about where to buy the market. There's a little overlap here at 37.35s. And the price trades down to what price area? It doesn't quite trade 37.35s, but you can see it trades into that volume area. And then when the closer it gets to the volume area, what starts to happen? You start seeing level 2 accumulations, real money trades doing real money things, not because it is a Fibonacci, but because it's real traders seeing that there's real demand at this price and starting to look at the possibility that there's a buy reversal that's going to come from these areas. Why would there be a buy reversal coming from those areas? Well, perhaps they started to recognize a possible turn in yields. Perhaps they started to recognize the overall bullishness that we had on yields. Perhaps they started to recognize a turning point on equities. So when they recognize that turning point on equities, and you see that in the background, equities had a very sharp reversal there. Equities ripped off the bottom edge. There was the buy opportunity just there. I don't care what this is in terms of Fibonacci. I don't even care that there's demand here. What I care about is that there is now reason to buy into that demand. That's what I care about. And as the price rips off that area, we can start to look for the first top edge, which we can see starts forming here. We can start thinking about that, and we can start trying to figure out some sort of market structure. We can see a little possible capper trade there area. So that would make sense in terms of structure, wouldn't it? So we can start saying, well, that little structure makes sense. So where would the target price for this buy trade be? And the target price would be this area here. You start thinking to yourself, well, does that have any sense at that price? And you look in the background and you suddenly realize, damn it, that's the same price as we sold off the last time. So there's your target price, confluence. Confluence. And what happens? The price trades up into that target price area right there. The price trades up into that target, and you start watching for the volumes. You start distributing for yourself. You start distributing process. You start taking the deal out. Whether it's a good enough to sell trade depends upon what the value is doing. And the price sells off of that area. Where does it come back down to? Now, what do you do when the price moves? You find out where the base demand is. You find out from this accumulation area here where the base demand is. You take it up to the high price, and you start looking for where the base demand is. You start hunting around that area, don't you? You start looking at that there and saying, right, there's the base demand. And then you start doing some technicals. You start drawing up some ideas. And you can see we've got a little bracket level here. We can see that. We can start to recognize that little change of behavior there. Up into a high, down into a low, and you start saying, right, where's my target price? If that's the high print and that's the low print, my target price is now this area here. And we start developing out that confluence. Confluence. We start putting this information together as process. We start to think about where the target price buyers may be located. And sure enough, that's where the buyers were located. And guess what happened when we came back up to that same supply area? Another target price, another sell came in, and it dropped away from that price. And where was the target price at the bottom? It was another one of these shapes. How many times is it exactly correct? How many times is it exactly correct? Not on random generated numbers, but this idea of confluence, this idea of people doing things at certain prices. That bracket there for the measure to the tick. This bracket here for the measure. Accurate to within 2 or 3 ticks. And then the sell-off back into the half-back trade again. Bouncing off the half-back trade to the tick. To the tick. It's crazy, isn't it? Absolutely crazy how accurate this process is. And obviously all you've got to do then is add a little drop of value to your story so that the story makes sense to you as a trader. So the story makes perfect sense to you as a trader.